Cryptocurrencies like Bitcoin have crashed recently. Maybe over the last few weeks, you've lost thousands or tens of thousands of dollars, in which case, I'm very sorry. The question is, can you use the losses that you've recently experienced to save you money on this year's taxes? Is there an action you can take right now to take advantage of some tax loophole and save some money? Is there a silver lining to your losses? That's what I want to answer in today's video. Hi, my name is Steve Hunt, and I am a certified public accountant. I am the consultant for prosperity and adventure, and I'm the expert at helping people like you reach your dreams faster. I'm also the owner of collegetaxrefunds.com, where we help recent college students and their families get back thousands of dollars that they don't even realize that they missed on their old tax returns. So if you have a recent college student in your family, please have them check out collegetaxrefunds.com to see if they missed money on their old taxes that we can help them get back. As I said, I want to talk today about the recent dive that Bitcoin and other cryptocurrencies have taken. You may be aware that $9,000 is what Bitcoin was trading at a year ago, and that a month ago it was hovering around its all-time high of $65,000. And last week it had dropped down to around $30,000, and now it's back up at $38,000. Maybe you were invested in Bitcoin throughout all of that or some of that. It would be fantastic if you had invested at 1 year ago, investing $9,000, and just held it all year long and then sold it last month for its high of $65,000. That would have been a great gain. But if instead you got in over the last few weeks, maybe you bought it when it was trading at $65,000 and then it dropped to $30,000 and you pulled out and you lost over half of your money, your investment, or maybe you have just held on to it and now it's worth $38,000 and you've lost money since you originally invested. Can you do something right now to take advantage of those losses and save money on your taxes this year? And the short answer is yes. So this question was brought up in a recent CNBC article, which you can see the URL to up above, and I'll put it also down below. Bitcoin crash opens the door to a tax loophole for investors. Check it out, read it. I want to talk about what it says right now and summarize it for you. So the IRS considers cryptocurrency such as Bitcoin to be like property, such as gold. It's more like these commodities than it is like your other currencies or your securities such as stocks. Now, all of those things are capital assets. I'm going to do a little tax lesson right now, which I get super excited about. Hopefully you'll bear with me as I explain that capital assets are things that if you hold on to them for more than 1 year as an investment, and then you sell them and you have a gain, after that year is over, that's considered a long-term capital gain. And you net that with your other capital gains and losses. And if you are still left over after all the netting with a long-term capital gain, you get to pay taxes at a lower preferential rate, as low as 0% and as high as 23.8% right now. And those rates are lower than your ordinary income tax rates, the rates that you would pay on your W-2 employee income or the income that you make from your personal business on your Schedule C. So if you hold these capital assets for shorter than a year, they are then considered short-term capital gains and losses. If you net your gains and losses and you end up with a short-term capital gain, that typically is taxed at your normal, ordinary, higher income tax rates. And so you don't get that preferential treatment. So one tax strategy that I've talked about in other videos is hanging on to your investments for longer than a year, and especially if they're gaining money, selling them after the year is over so that you can pay lower tax rates on it. But you'll notice there was another tax strategy going on in this netting where I was throwing my hands back and forth, saying that you net your gains and your losses together. If you had sold capital assets during the year and gotten out of them and you'd lost money, you can net those losses against your capital gains, and you don't have to pay tax on the capital gains to the extent of the capital losses. So let's say, for instance, that last year you invested $100,000 in Tesla stock somewhere through the middle of the year, and then it took a little bit of a dive, and you sold it when it was now worth only $90,000, and you lost $10,000 on your Tesla investment. And let's say you thought, this is too risky for me, I'm out, and you never invested in Tesla again. The IRS looks at that and says, yes, you actually lost $10,000. And so let's say you also had some gains in other capital assets, maybe gold, maybe in Bitcoin, and you sold some of those gains, let's say $10,000 worth. You net them together and you had no capital gains or losses. You pay no tax. So that's how you net the losses together. There are some caveats, however, for if you're investing in something like Tesla stock or other stocks and you sell it for a loss, but then you decide, I still think Tesla's going to go back up, so I want to get back in. And you get back in, say 2-3 weeks later, up to 30 days later after you had that loss, and you buy back your $90,000 of Tesla stock. The IRS and Congress considers that a wash sale. The rules are that if you buy back the same stock position that you had before the loss, and if you buy back that position either up to 30 days before you sold the stock for a loss till 30 days, up to 30 days after you sold that stock for a loss, then they look at it and say, well, you really didn't change positions. You had $90,000 of Tesla stock, you sold it, but then within a few days, you bought it back again. You really still didn't change your portfolio or your financial position. You didn't lose any money, they say. And so you run afoul of the wash sale rules, and you don't get to use that $10,000 loss to offset your gains that year. However, cryptocurrency, because it's not a stock or security, doesn't have the same wash sale rules, and that's why we have this little tax loophole. So what I've been talking about up until now is what we call tax harvesting of your losses. It's something that it's a strategy that you want to talk to your certified public accountant or your investment advisor about before you get involved. But certainly it benefits many people, especially if they have high tax rates, if they've been doing a lot of investing, if they have a lot of capital gains, and if they have some stocks or other capital investments that have lost money throughout the year. It makes sense to sell some of those loser stocks and investments in order to offset your capital gains with your capital losses. But once again, you only, if it's for stocks that you've got a loser stock and you want to get out of it, you want to cut your losses, then it might be wise to do exactly that, and you'll save money on your taxes by offsetting that gain with your capital loss. However, if you buy back that stock within 30 days, that loss, loser stock, once again realize that you're not going to be able to use that capital loss because of the wash sale rules. With cryptocurrency like Bitcoin, we don't have those wash sale rules. So if you invested in Bitcoin or other cryptocurrencies in the last few weeks and now you've lost money, it may be wise for you to sell that Bitcoin or cryptocurrency right now, recognizing that loss. Let's say you invested $100,000 several weeks ago and now it's dropped and it's only worth $90,000 of Bitcoin. You can sell it and you have a $10,000 loss, and then you can wait a day and buy back your $90,000 of Bitcoin if you think it's going to go back up again. And you can use that $10,000 of Bitcoin loss to offset $10,000 of other capital gains. This is why it's a tax loophole. It's different from stocks. And it's something that you should talk to your tax advisor, your CPA about, or your investment advisor, because it's not for everyone. You want to make sure that you have some gains that you're going to offset. And you also want to make sure whenever you're harvesting losses that you are not upsetting the balance of the diversity of your portfolio, and that you are considering your risk tolerance levels and things like that. So definitely talk to your advisors about these different things. As I say, when you use Bitcoin or other cryptocurrencies to harvest your losses, you can buy them back, but don't buy them back immediately. Don't have some software program immediately trigger a buyback. So you don't want to sell your $90,000 of Bitcoin and 1 second later buy back $90,000 of Bitcoin. The IRS, even without wash sale rules, can still look at that transaction and call it a sham. They can say there's no economic substance to that transaction. You had $90,000 of Bitcoin 1 second, and the next second later you still had $90,000 of Bitcoin, so you didn't have any risk of losing anything, and you didn't actually ever sell it, and they can deny your $10,000 loss. You need to wait some period of time, and that you need to experience some kind of risk that you might actually miss out on the gain, or something bad might happen. And since Bitcoin and other cryptocurrencies are so volatile, they swing thousands of dollars every day. One day is, or they could swing thousands of dollars every day. They don't always do that. But anyway, one day is generally enough, at least according to that CNBC article I showed you earlier, If you sell $90,000 or you sell your Bitcoin for a loss, then you buy it back the next day. That's probably good enough to use that loss to offset your gains. Now, these rules about wash sales not applying to cryptocurrency might change in the future. Congress might decide that they want to close up this tax loophole. They want to make cryptocurrencies work like stocks. But when they change the rules, they probably will not change them retroactively, so you can continue to harvest these tax losses, just like I've described, up until they actually change the rules, most likely. Once again, talk to your tax advisor. Because as I've said, this isn't for everybody. Your tax advisor can help you consider whether or not your portfolio is correctly balanced and diversified, and whether or not you need to harvest those losses in order to reduce your taxable income, and also whether this will greatly benefit you because you have a high tax rate, or whether this won't benefit you very much because you don't really have a high tax rate. Thank you so much for watching. If you have any questions about wash sales, any questions about this kind of tax harvesting strategy, please go ahead and put them in the comments below. If you want to see me talk about something else having to do with taxes or finances, please let me know in the comments. Thank you so much for watching. Please subscribe and like and share this video, and have a great day.